Hey, if you are looking to open a new gym and you are trying to raise some capital from potential investors, or maybe talking to the bank and your lender has asked you for a set of financial projections, and now you're kind of the deer in the headlights trying to figure out how to pull together a set of financial projections that are going to make sense to your potential investor or lender and tell the story of your gym, and do that in a way that looks good and makes sense um, to those folks, then you are in the right place, because we have put together a gym financial projection template built specifically for this purpose. My name is Adam Hooksema. I'm the co-founder of ProjectionHub, and over the last decade, we've helped thousands of entrepreneurs create financial projections for all sorts of different businesses, but specifically today, we're talking about our gym template. And we have linked to this template in the description of the video below. And so if you want to go grab that template and work alongside, you can do that now. But I'm going to dive into this template and just show you how to fill it out. So the first thing I want to show you is really starting here at the end. So this is our at a glance tab. And we have, you can see your potential revenue here, projected revenue, your some different graphs and tables. You can see some key performance indicators for your gym, like number of new members in a year, your total ad spend, cost to acquire a customer, and your total members, how many members you have, and what your churn rate is going to look like as well. You've got ongoing member lifetime value number here as well that's important to look at. So a lot of key numbers, as well as some startup graphs, break-even analysis, and more. So this is kind of what we get to at the end, but in addition to that, you'll get your projected financial statement. So your projected income statement for 5 years, cash flow, balance sheet, and you also get a projected income statement, cash flow, and balance sheet by month as well for each of the 5 years. So let's jump back to the beginning here and take a look at how we got here. How did we fill this out? And the first thing I want to mention is that any cell that you see highlighted in blue is a assumption cell that you can change the data in there without breaking the template. So put in the name of your gym, the start month for your projections, a personal investment if you're putting in personal investment, or projected investment from others here. You can add those. And then you'll put in your fixed assets. So in this example, we're assuming that you're leasing the gym building itself. And then you have some leasehold improvements, $100,000 of leasehold improvements to the gym to get it ready, as well as $500,000 in gym equipment that you're purchasing. So in this example, we're assuming you're purchasing this equipment. Now, you may lease some equipment, you may purchase some equipment, you may have a mix of both. If you're leasing all of your equipment, then you wouldn't want to enter it in here. This is assuming you are purchasing it. Now, with that in mind, we're projecting a $650,000 SBA loan that we're going to take out to be able to help fund these startup costs. We're going to jump into our input revenue tab. Zoom in here a little bit. And so I'm going to actually show you two different templates here. We have a template that's more focused on membership-based gyms. So this could be like your Planet Fitness or Anytime Fitness style, or even like a full service gym as well, Lifetime Fitness as an example, where you're paying memberships. You may also have classes, but it's really focused on membership model. And then we have a separate template that's really more focused on a class-based model, and I'll show you that in a second. And when you buy one of our gym templates, you're going to get access to both of these. So I'm going to just show you both here in the same walkthrough. Now, the first thing we're going to do is enter in the maximum number of members that our gym can support. And we're going to enter in our monthly ad spend. We're going to assume some cost to attract one new gym customer. Then we're also going to assume that some gym members are going to join through word of mouth or social media organically. And this will give you your total new gym members each month here. And then we're assuming a churn rate. Now, different gym models have different churn rate assumptions. And so, some models are very high churn where you have to kind of replace your membership, every year. Some have very loyal members. And so it kind of depends on what your particular model is going to be, what your focus is. What we have right here is an annual churn rate, meaning half of your members leave every year, is what we have put in here as an assumption right now. And now we have our different membership plans. So you can, we have the ability to say, okay, we have an annual membership, a monthly membership, we have some add-on services, and even a pay per class option. And you can put how much you expect one of those regular customers to spend per month on these items. And here you're going to put in what percentage of your regular customers are kind of in each bucket. So you might have some customers that don't become members, but maybe you have some individual classes that you sell, and you just have 10% of your regular customers just come for a class, and that's all. And 40% have the annual membership, for example. So that's going to give you your gym revenue here from the classes and membership. Now we also have the ability to add in food and drink revenue, merchandise, and other revenue as well. Now I'm going to jump over to our class-based template. So everything else in this template is really the same, except we have more of a focus on classes and making sure that we really dive into the details of this. So if your business is more like an Orange Theory or maybe a yoga studio that's heavily based on group classes, then you'd probably want to use a class-based template. And so you can put in your different classes that you have, how many per week you have, how long the session is, the maximum number of students, the fee, the instructor pay, and then if there's any commission to the instructor as a percentage of revenue as well. And then again, you'll have the ability to enter in your capacity that's capacity filled by month. And so this is going to calculate, how many students per month and per class that you're estimated to have based on these assumptions, and whether you will have enough capacity to fulfill those, the demand as well. And this option also does allow you to put in membership options as well. It's just a little bit more focused on the class-based model. So that's really the main difference between the two templates. I'm going to jump back to the one we were working on initially here and take a look at our operating expense tab. So here you can see we've entered in things like our rent. I also entered equipment lease. So we spent $500,000 to buy equipment, but maybe some of the equipment we're also leasing, and so we put in that expense there as well. Also point out this here, that you can select from this drop down that your expenses can be either a percentage of total revenue or a fixed dollar amount. And so most of them we have as a fixed dollar amount, but here we are saying our transaction fee, this could be a credit card fee, is 0.03 or 3%. So if you have a 3% credit card fee, you'd want to enter that in as 0.03. And it will create an expense line of 3% of total revenue for those transaction fees. Now, jumping into the input salaries tab, you can add individual salaried positions. They could be part-time or full-time. You can enter in what month those positions are going to start. So they don't have to all start in month 1 of the projection. Some could start, let's say you're going to add a trainer in month 13 as the business grows. And you can add the number of those particular employees here as well. How many front desk part-time workers do you have? We're saying we have 3. We're saying we have 3 class instructors, 1 director, 1 marketing person, 2 trainers that are starting in month 13. So that's how this is filled out, and you can see there's plenty of slots for you to be able to add more employees as you wish. And that really brings us back to where we started, the profit and loss at a glance. And really at that point you're done, and you can see based on the numbers that we input, we're starting out just under $500,000 in revenue in year 1, going up to 1.1 million in revenue in year 5, with a 20% net income of 235,000. So you'll need to do all of your own research here. Of course, your particular gym model is the key here for all these assumptions. What size of space are you? What are you going to charge? What do you think your churn rate's going to be? Are you going to be able to retain members, or are you going to have to constantly replace them? Lots of key assumptions here that are really based on your specific business plan. So if you have questions, leave a question down in the comment section of the video, the YouTube video below, and we can reach out to you and answer questions that way. You can also reach us at support@projectionhub.com. All right, best of luck.